Hello, everybody, and welcome once again to our weekly podcast, Under the Macroscope, with Skybound Capital's chief strategist based in the UK office, Jabir Sadawala. And Jabir takes a weekly look at some of the macro effects in the world economies and how they impact our approach to investing. He also does his week in review, which comes out every Monday, and we encourage you to go to www.skyboundcapital.com to subscribe to that week in review. And also, this podcast is available on Apple, Spotify, and the Google Podcast for Android platform, so you can subscribe there. And thank you to you all who have subscribed and are helping us move steadily up the charts. Always a good place to be. So, Jabir, we're going to start off this week with an issue that has dominated news, it would be fair to say, and you've described it as turmoil that we've seen around short sellers. And where does this leave things for hedge funds going forward, and indeed for Wall Street in general?
Yeah, thanks, Matt. I mean, it's been a torrid week in that regard. You know, just about every news bulletin has focused on this. And actually, I mean, initially, I was a little dismissive of it. But then as the days went on, suddenly dawned on me that, no, actually, this could potentially have some serious ramifications. What it boils down to is a battle, a war between the world of retail and the street. Put it another way, it's the world of shorting versus the short squeezers, right? And for the benefit of listeners, just to be clear, what happens when you short a stock? Basically, you think the price of a company is going to go down, and so you do the opposite to what you would normally do. You would go out there and sell that stock. But how do you sell something that you don't have? Well, simple. You go and borrow it from an International Securities Lender. And there are plenty of them. There's a price, and that price varies depending on how hard or easy it is to get that stock. And at some point, you then cover your position, i.e. you buy it back in the market, and you return it to the securities lender. That's how it works. And institutions, particularly hedge funds, have done this for a long time. What's happening now is that you've got a group of individuals, traders, who, and in this instance, it's the Wallstreet bets guys, you know, on the Reddit platform. It's a platform that has something like 3.5 million users. It's quite staggering. And they range from the unsophisticated to some who actually do focus on fundamental research. And what they've been doing, and I use the word in inverted commas, ganging up to drive the stock price up of these very same names that have been heavily shorted. And that's why we've seen these violent fluctuations in the market. I mean, the casualty list is quite high. Even I'm only talking about the disclosed list. And for instance, a leading hedge fund by the name of Melvin Capital is reported to have lost over 30% as a result of this activity. It was a big fund as well. It started out the year at around $12.5 billion and lost over $3 billion in a very quick time. And it's had to seek help from a couple of other hedge funds. For me, the implications now are really serious. It's being taken so seriously that even the White House is paying attention to this. The press secretary is keeping an eye on it. So too is Janet Yellen. The regulators are. And also the directors of various exchanges. Because there's a legal issue here. People are saying, well, why are we trying to clamp down on these guys? We've seen some of the traders, like Robinhood, for instance, and Interactive Brokers, to try and stem this. They've raised their margin requirements, and quite significantly too. You know, now for buying, you have to put down 100% margin. And for selling, i.e. shorting, you have to put down 300%. Well, that's no surprise, because look at the way a lot of these guys are being carried out. Hedge funds won't like that. But look, at the end of the day, it probably won't make a massive amount of difference. But it is capital that otherwise gets tied up. I think the legal issue here is, are they doing anything wrong? And we'll have to see how this plays out. I think it'll be a function of how far this goes. We know it's gone to other countries now, Australia, Europe. But the question is it, if we're going to label these guys as doing the wrong thing, then in principle, is it wrong to short a stock as well? Because what happens there? You know, you are driving the price down effectively. That might not be the intention. You might believe that actually the price is going to go down because the company is overvalued, there's fraud, all kinds of issues. But actually the act of shorting does end up driving it. And this is going to be the battle that rages. And whatever the outcome, it could have ramifications for the investment industry in general.
As an onlooker, it does strike one that it's an opportunity, if one can call it that, for more regulation.
Yeah, bizarrely, that is the case. I don't know how they regulate this, Matt. I think that's the key problem. What the brokers have done, the Robin Hoods and the IBs of the world, is really to protect themselves. That's their first priority by raising the margin requirements. But it doesn't solve the overall problem. And that is, these guys must be feeling really gung-ho right now, because a bunch of traders have got together and they must be thinking, wow, we've beaten the hedge funds. We've really given it to them. And in fairness, they have. And a hedge fund must be thinking, crikey, what do I do now going forward? I've got to really be careful. It's as if you're restricted in the kind of names that you can go into. And it's not difficult to get a list of the stocks that are shorted. They're readily available. So, no, I think it will require regulation, but, we know how regulators react. They come in with all kinds of regulation, but it doesn't always address the issue.
Well, it's a story to keep an eye on, and we suspect that things are going to move pretty quickly in that regard, and the story and the outcomes thereof will develop quickly. Another process, another story that's evolving very quickly is vaccine rollout. We've spoken about it for the last 2 weeks, but it is so important from a global macros perspective to keep a close eye on it.
That is absolutely right, yeah. And every time I look at this, it's on a daily basis, the numbers being vaccinated and the rates at which they're being vaccinated and the countries that it's spread to are just increasing all the time. So there is clearly a momentum that is built up here. Globally now, 86.5 million people have been vaccinated. The daily rate for what averages are worth, there's a dangerous saying, the floor of averages, but it's over 4 million a day. But the rising stars in that, include, for instance, the UK, which has now exceeded 350,000 a day. That's a critical number. The US has really picked up. They're now at almost 1.3 million a day. So the infrastructure there is rolling out. That's how seriously they're taking it. I think one of the key points here, and it's a question that I was sitting here 2 days ago, and I thought it's all well and good vaccinating people, but is it actually working? And so, I thought, well, if you're going to look for evidence, surely one of the best areas has to be the number of hospitalizations. Because if the vaccine's working, you would have thought less people are going to hospitals. What better country to turn to than Israel, to see how this is going? And there has been a remarkable drop in Israel. The numbers visiting a hospital just after the first dose plummeted. And then a week after the second dose, it dropped by as much as 60%. So it is working. The problem that's emerging, which we've all got to be cognizant of, is that there is a behavioral reaction that is taking place here, because overall the infection rate has come down, but not as much, not proportionately. And I think there's a sense amongst people who have been vaccinated that, hey, it's all hunky-dory now. We can go out and party time, which could possibly be a reason why Boris Johnson wants to extend the lockdown over here.
Another story that we had our eyes on here in South Africa midweek was an announcement around what's called the controlled compassionate use of the FDA-approved drug ivermectin in certain circumstances for the treatment of COVID. So we'll also keep an eye on that in the next week, because it has the potential to be a game changer in some respects, and depending on how medical practitioners interpret this controlled compassionate use. Just finally, quickly, before we wrap up, I did ask you before recording the podcast a quick comment on liquidity and the requirement for liquidity amongst investors. I guess perhaps retail investors have always been more sensitive around liquidity, but we're seeing among some institutions as well a greater requirement for liquidity. Does that mean there is some opportunity out there for those who are prepared to put patient capital to work?
I think there definitely is for now, and it will remain so for certainly some months ahead. Something I found striking this week was just the extent of corporate fundraising that has gone on. I mean, January has been a bumper month. I mean, companies have raised in excess of $400 billion in financing, just the first 3 weeks of January alone. That's something like 170 billion more than what is normally expected at this time of the year. Again, that's built around averages, but you know, that's a big figure. We're also seeing innovation in terms of, I wouldn't say new instruments, but certain instruments picking up a lot more. So the IPO market's doing very well. SPACs are now really very much at the fore. You know, these are special purpose acquisition companies. Some call it a blank check company. You raise the money and then you go out and figure out what you want to allocate it to. You know, I have mixed views on that, very mixed views. But there is a frenzy amongst companies. So it tells you they are hungry. They're hungry. And why? Because they want to get their financing, debt and equity, sorted out whilst rates are ridiculously low. And if they can push this out for 2-3 years, then that's vital, because whatever comes of the storm clouds that are looming on the horizon, and they will come, you know, if you're covered in terms of your debt, that's going to be a real blessing. From the investor side, absolutely there will be opportunities here. You know, you keep some powder dry, because the opportunity to allocate is going to be immense, especially when those yields start to go up.
As always, some fascinating topics to discuss with Jabir in our weekly podcast. Don't forget you can subscribe at www.skyboundcapital.com, and also find us on Apple, Spotify, Google Podcast for Android platform. And also you can subscribe on our website to Jabir's Week in Review. Until next time on Under the Macroscope, have a great week.